Hi guys, welcome back to the channel, Subsistence Traveling. I'm your host Jay. Today we're talking about 3 reasons why the share price matters. And I'm doing this video mainly for newer investors and those with portfolios under 100K. I also want to take this time to send a special shout out to all my new subscribers. I appreciate you checking out the content and staying tuned. And so my disclaimer, the content of this video is not meant to be financial advice, but my own views designed to stimulate thought. All right, so 3 reasons why a stock's dollar price matters. We're going to go over the 100 share rule, risk management, and accessibility. All right, so the 100 share rule simply states that you need at least 100 shares to make a significant amount of money, whether it be an individual stock, a mutual fund, or an ETF. In addition to that, you need a diversified portfolio and also consistency. See, investing is something that's done over time, okay? And you need to consistently invest a certain amount, okay? And with high share prices, that's going to be very difficult to do. I know that fractional shares, or some brokers allow fractional shares, but again, would you make any significant amount of money off of that? Also, if you're hold 5 shares of Amazon, are you having a diversified portfolio? See, with these high share prices, you know, it's hard to have a diversified portfolio because I know most people want the best companies. You want to own the best companies, and that's understandable. But the share price does matter, especially to accumulate shares over time. All right, so the next point is risk management. Okay, and the first point is less is more. All right, now basically the point of less is more is the rule of life. We all want to put out less and gain more. Take less risk, but get a higher reward. That's just how people are. And that's how you have to play the markets to win. That's what risk management is all about. You want to risk less of your hard earned dollars. And the share price plays a significant role in that. Another thing is, I see people are preoccupied with the markets. I've never seen people so preoccupied with CNBC and Bloomberg and the quotes ever in my life. And the reason why I think this is because so many people have their entire life savings or their entire savings, their retirement, you know, in the market, which is not a good thing. This is extremely dangerous. All right. What this leads to is you investing more because the share price affects how you invest more of your cash. So this causes you to invest more, especially in a period where dividends are low, interest rates are low. People are investing more hoping that they'll get a higher return. But unfortunately, that's not always the case. Sometimes, or a lot of times, the more you invest is the more you lose because in actuality, the markets are more about probability. You know, it's more about probability. So you want to make sure you invest less, and that way you lose less. Risk management is probably the most important thing in the markets. I think that's the difference between the wealthy class and the poorer class. You know, the wealthy are hedged. They're hedged, and they take less risk. and that's the thing. So you want to invest. That's why it's good to wait for pullbacks when you're buying, because it's just the concept, you want to invest less, that way you'll lose less. Okay, that's a very important point. Another thing, we've been experienced in over the past 30 years, we've experienced a really good stock market, but you have to understand this is not normal. That the kind of capital gains that we've seen over the past 30 to 40 years is not normal. you know I've studied stock markets for hundreds of years, the history of stock markets over hundreds of years. That is not normal. The market does not always go up over the long run. You could have a 10-year period where the market doesn't. It's possible. Don't, because really and truly, investors before the 21st century, main investors mainly invested for dividends. So that's something you want to keep in mind. So another thing is accessibility. Right now, I'm very concerned about the accessibility of the stock market. I think the average person is being priced out of the stock market. You know, going back, because I've been doing this for a while. I remember, even as maybe 10, 12 years ago, companies used to do, when share prices got too high, companies used to do secondaries, or they would do reverse transactions. If a stock was getting too expensive, they would do a secondary, or bring the share price down so it's affordable for the average person. And these transactions would never it doesn't affect the average shareholder, current share, it doesn't. It was just something to make sure that the stock is affordable to the average person. For some reason, I hope we see some secondaries, or some stock splits or something to make these shares more affordable. The FANG and other good performing stocks are mostly above $200 per share. And like I said, it seems like the best quality stocks are above $200 a share, and it's absolutely no way that the average person with these low wages, high cost of living, can afford and accumulate a position in a company at $200 a share. All right. I think this is largely due to financialization and the destruction of the real economy. This is just basically, no people have nowhere else to put their money. It has nothing to do with the economy. People have nowhere else to put their money. When you look at in parts of Europe, Europe has been in a stagnant, the last decade. I think Western Europe has been stagnant. However, go to on the London Stock Exchange, you're seeing share prices of £10,000 per share, £8,000 per share, and that's normal for decent sized companies. Matter of fact, it's hard to find a decent company trading at less than £200 per share in on the London Stock Exchange. A similar thing in South Africa. The share prices are very expensive. I'm wondering who owns most of the stocks there. It couldn't be the average person. And you're seeing that similar thing happen in the United States. And it's mostly, like I said, due to financialization, and the destruction of the real economy. When you go to places like, for instance, Singapore, Singapore is a developed country, good quality of life. The stock prices are very low. Why is that? Because they're an entrepreneurial culture. All the money is not going into the stock market, and that's what you're seeing in the Western world. Okay. So my final thought. Right now, I think everyone should have at least 30 to 40% in cash. And that's why I encourage people to invest in the markets, but invest in such a way that you're also able to keep a good amount of cash. Okay? Look for value. All right? Look for value. Also, look behind the scenes. I think everyone wants to own Apple and Facebook and Google, Netflix, Tesla. But what you can do is you can look for you know the suppliers. Do these companies have suppliers? Is there a particular commodity that these companies need? A particular item that's key to their business that they have to look for who are their suppliers and so forth. What services do they consume, and that's how you could find other companies. The whole tech space, there are a whole bunch of companies in that space that support these companies. You can invest in these companies and you may find some value there, and not have to spend $200 per share. Look outside the US and the developed world. Mainly outside of the US, you could find good share prices in Canada, also in Mexico, good share prices in China. A lot of people look down on Chinese stocks, but there's some good quality Chinese companies out there. Especially in the online space, the Chinese consumer space. There's some good quality companies there. Also in the emerging markets, a lot of companies that make products that are essential during the crisis and will remain that way after the crisis. So yeah, look outside the developed world. All right, so guys, I also want to just encourage you guys to stay tuned for future videos. I'm gonna be doing videos, like about stocks under $60, stocks under $30, stocks under $10, and so forth. Because I want people to be able to invest in this time. This is a very uncertain time. Many people lost their jobs, and I think it's a good time, to be an investor or to start investing, And I just want people to do it the right way. As always, guys, I encourage you to like, share, and subscribe to the channel. And as I always say, peace to all.